Started, and I'll be sharing my screen. Please let me know when you can see it. Yes. Perfect. Thank you so much. I'm going into presentation mode. We'll start with an announcement this Thursday through our portal. You can access a webinar by our Senior Advisor Solution Engineering, Bruce Quenway. This is a very interesting topic on the lease management through Center of Excellency, and Bruce will walk you through the pros and cons and different topics related to that. It is a webinar that for the CPAs out there, they have the right to some CPE points. So make sure to access it. Maybe some of you already know we have presented this through our social media. So if you are interested in the subject, you're very welcome to subscribe. You have the link in this presentation, and we'll be sharing it into the chat as well. And with this little announcement, we're going through the agenda for today that has been distributed before. As you remember, last time we stopped in the middle of important dates in Nakisa, so we will be continuing with that. We'll be talking about dates for lease modification, for lease events, and then we'll walk you through impairment events. We thought this is a very interesting subject, and we wanted to present you different scenarios, different type of transactions associated with the impairment functionality in Nakisa. And with this session, we're starting a topic that will continue through the next sessions on different reports in Nakisa. And today we will start with the disclosure report, and in the disclosure report specifically with the asset roll forward. So we realized that we haven't presented reports so far in the office hours, and it is a very important subject. So we'll be starting this section on reports, and we'll start with the disclosure report that, in our opinion, are the most used. But we'll go through all the available reports that we have in our application. And with that, and I hope that everybody is still seeing my screen, because I'm not able to see much, and I'm counting on my colleagues to interrupt me when there are questions. Yes, thank you.
Yeah, we can see it, Katerina.
Perfect, thank you so much. And I'm relaunching my invitation to you to interrupt me to ask your question. And as always, you can send your question even before the session as well. We'll do our best to address them. All right. Now, let's start with the important dates, and some of the slides you already seen them before, and we talked about the dates for the terms and conditions, the first payment, last payment. We went through the expected start date and end date. Was there a question or some noise?
No.
No.
But they need to put themselves in mute, please.
All right. We can continue. And we went ahead and we talked about dates for postings, and we touched upon other type of dates, but we haven't got into the dates related to lease modification, to lease events, and what we call in Nakisa the effective date. And I've presented this slide before, but I think it's important that we talk a little bit the way that Nakisa is treating lease events, and why is it important that you are aware of all these details. So when you prepare your lease modification, one of the things that you need to keep in mind is when exactly the system is going to apply that lease modification. So the effective date in Nakisa is simply, and we do call it like that, but it's simply the date when the lease event is applied, when the schedules are being recalculated, taking into consideration the new terms and conditions, the changes that you made. So one of the things with the effective date is that it cannot be before a previous event. So if ever, as we are now in October, if ever you applied an event in October, but then you receive notice that there was another event, let's say a supplemental or an adjustment to the lease amount that happened in September, you won't be able to simply go back in time and recognize it in September. So there are ways of treating these type of catching up entries, and we touch upon that subject, and if needed, we'll get back to it in some other session. But um, pretty much, and like in accounting, the dates and the way you think about the dates is really like looking at a river. It goes into one direction, calendaristically speaking. So you need to follow that sequence. Of course, as I mentioned, there are always way to do adjustment, catching up entry, but bottom line, if you are if in October, let's say, this is the period when you will need to apply the event. And with that in mind, the effective date, the list modification happens in a period where you haven't posted any of your periodical transactions. So it's as you want to see it, an open period. Again, we are in October, we are on the 16th of October, so we can safely presume that the periodical transaction are maybe posted sorry, are maybe posted a little bit later in the month. So you have the period open, you can apply the modification. And this is our recommended approach, that you perform your list modification, you perform your entries. I'm sorry, I have to cough. I'll put myself on mute for a second. Autumn season always comes with its perks, so it brought me a cough. Sorry, coming back to the effective date and the list modification. As I was saying, when you apply the event, you need to choose a period that it's open from your accounting point of view, a period where you haven't posted your periodical transaction, and by that I mean the payments, accruals, and the asset depreciation. Then, of course, you need to think of the term that you are entering. So you enter a term that either starts on that month or starts in the future. That's why the ROU start date, and by that we mean of the new term, it has to be in the period that you are choosing or in the future. And we're going to talk about advanced arrears, but I'm going to show you precisely in the schedule. And I have here a slide, and we're gonna look through this into more detail through the example. So when you look at your schedules, you will understand why you need to choose a certain effective date. And it all starts with your first column is in the all column schedule, the accrual period that are in fact the dates for your payments, the payment periods, if you want. So this is the very first thing that the system takes into consideration. However, there is not your accounting period. Your accounting period is always your fiscal period. So in a lot of situations, depending on your fiscal variant, that would be further down the line. So we will walk through those details for you to understand, for you to have clear in mind. And I know all of you know a lot of these things, but depending on the complexity of the contract, sometimes it's harder to see. And I'm insisting on that because I do think it's important for you and for your users to understand how exactly the system works, so you can effectively apply the modification. And I left in here some other details for you to come back to, but with that, we can go back to the application and look into an example. So let me know if there are any questions so far, and if you have any comment, any doubts, I'll be happy to address those. And if I'm not able right now, we'll get back to you. So I'm switching my screen to our application. I hope you can still see my screen. I'm taking
Yes,
that as I'm taking that as a yes. I have here an example that I have prepared. So I have a base rent. I introduced a cash incentive in February, and I posted all my transactions, and I'm gonna show you that specifically our postings. So let me make this bigger so everybody can see. So I made all the transaction up to the end of September. This is only trying to mimicking a real life situation. We are in October, so the assumption is that everything is posted up to September. So let me switch back for a moment in all columns view, so I can walk you through the accrual period. So what I have here is a contract, whereas the payment date is on the 20th. And when your payment date is on the 20th, and when you are paying in advance, and remember, advance arrear, it's a key information for the present value calculation. That's why it's so important. But for certain, depending on the complexity, as I said, it might be confusing. But what I want you to remember is that all you need to remember is the beginning of your accrual period. So your period start date, as you look in here, that's what the system is going to propose you as the effective date. And why is that? Is because with every adjustment you are targeting a period. Like in this example, I made an event on period 3. And this, in fact, if I scroll a little bit to my right to get to the month end closing, I'll see from an accounting, from a fiscal perspective, this is my period end. It's February 28th. And in fact, the information for that will serve as the base for accounting is in the month-end outputs, and the period end date from an accounting perspective is in here. And you can see, well, this is what I was targeting as an accounting period. So it was from the 1st until the 20th of February. But from a payment perspective, because I'm paying on the 20th, my period is not overlapping with my accounting period. So it starts on the 20th of February and ends on the 19th of March. If I would have payment in arrear, my period will be the next day after my payment, but the same rule will apply. The system will always propose to you the period start date of your targeted period. And with that in mind, and because I posted all the entries up to the end of September, let's proceed to perform an event for this contract. And in order to do that, I'm going at the level of the contract. And once you have these rules very clear in mind, you can make use of the mass list modification, for example, and that's where the effective date becomes a bit problematic if you're not comfortable with the rules. So the reason I'm showing this through a simple example is because then you can extend the same logic to mass operations. From the level of the contract and from the 3 dots, I'm starting a list modification. And as I'm doing that, I'm being prompted to this window, and I'm being prompted to choose an amendment date. The amendment date is a date that doesn't have any impact on the calculation or on any other transaction. So it doesn't have a financial or accounting impact. So this is simply the date when you perform the event, and it's just for your audit trail. So I can say, well, I can put the today's date, and this is really a user choice. In the reason code, I have all the type of choices that I have. I want to introduce a new term, so I am going to choose addendum to contract new terms. Then we have the modify contract rate. You might remember with our latest version, we introduced a switch for you to set up this as you wish. By default, in this particular version, I have modify contract rate checked, meaning that if I let it like this, the system will also allow me to modify the contract rate, but it is still my choice to uncheck it. So I do not want to modify the contract rate. If I have a contract that is using IBR, I will have that choice later at the send to assessment at the activation group level. So I filled in all the information. I can put something in the description for for me to get back to it. So let's say add payment adjustment, for example, and I'm going to add a supplemental. I can add something. Keep in mind, and you might remember this information, you will be able to retrieve it in your DQI as long as you are in the latest version. So I'm clicking submit, and the system is going to create a draft for me to add the new terms and conditions so I can proceed with the list modification. We did talk about the amendment date last time to just let you know that this is a date with no impact onto the schedule. So I hope that one is clear. I have my draft open. I can follow it clearly because I have a different color. And I see that the version is draft. I'm following the trail of little pencils, so I'm going to the list component to add my new term. I'm going to choose a standard term. As I said, I want to apply a payment adjustment, so I'm choosing a supplemental. Let's say I have to pay $300 more per month and for a limited period. And I'm going to choose one time frequency. So this is the base for my lease amount calculation, and how often am I paying this is monthly. Now I have to choose my dates, and I'm going to start with the expected start date. I'm in October, and this is a term that I've been made aware of in October. So I'm starting with that, and I'm going to put the end date. So these two dates should be based on your actual legal document. It's something that you have, or it was communicated through some other department. So let's say I have this new term that is valid for 6 months. I'm required to pay more for 6 months. In terms of the payment, supplemental is an overlapping term. I'm overlapping with an existing term. But because it's an additional payment, I can opt for other frequency. I can have a one time, for example, or I don't need to follow the exact same frequency as the base rent. If you have a reduction, of course, you need to keep in mind you cannot reduce something that it's not there. So you need to follow the payment dates of the original base rent. And my base rent was considering payments on the 20th. So I'm in October. So my first payment will be October 20th. So I'm going to choose that. And for the last payment date, this being simply a settlement, I can go with the end of my contract. So I had something changed on me here. So I can use the same as the end of my contract. I can put it here. It's simply a cutoff date. It's not an actual payment date. And with that, I entered my term, I enter my supplemental, and now I can approve this at the contract level. Sending to approval and approve as I'm a power user here. And now I can move to the activation group level following the little pencil, the supplemental. I need to mention whether it's likely or not likely to exercise. As I'm mentioned that this is starting on the 1st of October, the assumption is this, that I want to exercise it right away. If it would have been something in the future, I would still have the choice to move on and exercise it later. And now I'm sending it to assessment, and this is where we have our effective date. And you can see, for example, I can't go backwards. I can't go to September because the first open period is October. And I have the 20th in green because that's the beginning of my period. This is what the system is suggesting for effective date, and simply because it's the beginning of my accrual period. So I'm going to choose October 20th. For the posting date, this is up to the user choice, and this will be the date that the system is going to consider, depending. If you remember, we talked last time about the rules for translation. So depending on what are those rules and what do you need to have if you are connected to SAP, your posting date needs to consider that. And of course, it needs to consider whether you are in an open accounting period. So the system, what it's suggesting is today's date, but I can change it for, let's say, 1st of October. And the document date, again, it's up to the user. The system will be suggesting the same as the effective date, but bottom line, the document date can be used for other purposes like translation, if you remember what we discussed last time, but also you can use it for your reconciliation to track down certain transactions. So with that, I'm clicking submit. We're still in draft, and at this point, what we want to check is the schedules. So I'm moving to the schedules, and I'm going to switch to all columns view. And I'm going to leave just the year 2023. And you can see already that we have the green line here in October. We can see the supplemental, and it's going beyond the period 11. So maybe let's switch to all year so I can show it to you. Remember that I introduced the supplemental for 6 months, so I can see it here. But if I scroll to my right, getting into what it is, the basis for accounting recognition, I will see that the system is considering October period for the adjustment. And if I scroll even further, I'll be able to see the adjustments for the asset and for the liability. They're in the exact same amount. It's only normal. And I'll be able to see the change for my gross book value. And I do expect to see a change in my depreciation following the event. So I am okay. I'm happy with the result, and now I can move on to approve and complete the event. I don't want to keep more time because we have more interesting subjects, but I wanted to walk you through these elements, through these details. So let us know if you have questions, if dates for events, for postings are still troublesome for you. We'll be happy to touch on similar subjects. So let me know if you have questions right now, or we can move to talk about impairments. Right? So I'll stop sharing and I'll pass the mic to Pratibha. Pratibha, I hope you're close by and you can.
Thank you, Catalina. Hello, everyone. I'm sharing my screen now. Can you see it?
We can see it.
Okay, great. So today I'm going to talk about impairment. So impairment losses, it decreases the ROU asset value, but it does not have any effect on the liability. It is done in the actuation group level. And currently, Nakisa supports impairment in standalone and hybrid system for ASC 842, IFRS 16, and GASP 87. We have to make sure that all the postings until the impairment date are done because the impairment date will be automatically set to the next open period by default. Let's go to the application. Over here, we have an active contract with base 9,000, and the ROU start date is 1st January 2022, and end date is 31 December 2022. And I have made sure, and I want to have an impairment event in February. So I have made sure that my January entries are posted. And now I can go to the context menu from the AG level. I can go to the context menu and select impairment. So here we already have impairment date that is on 1st February 2022, which is the open with open period without any postings. And here we can select.
Pratibha, sorry to interrupt you.
Yep.
Can you please increase the zoom on your? Okay, perfect. Thank you. And because we were talking a lot about dates, and this is still an effective date, what you're saying here, but the system is going to propose you this date depending on, as Pratibha was mentioning earlier, the first open period. And impairment is one of those really just asset related events. So the fact that you posted the depreciation up to the date, up to the end of January, that's why the system is proposing the 1st of February. But similar to what we were presenting earlier, it is still the beginning of your accrual period. So the system is giving you this by default. Go ahead, Pratibha. Sorry for the interruption.
No problem. So, and then in the recent code, we only have impairment loss. I'm selecting that. And let's say I need the depreciation life remaining to be 5 months. I'm selecting 5. And here we have the GPV and NBV at the beginning of the period. And we have to select the recoverable amount. Recoverable amount cannot be lower than the difference between the NBV beginning of the period and NBV at the end of the period. And it cannot be greater than NBV beginning of the period. And the impairment loss is calculated as the difference between NBV at the end of the period and the recoverable value amount. So here we have 10,899 as NBV beginning of the period, and NBV end of the period is 9,908. So the difference is 991 something. So let's say our recoverable amount is 1,000. And since I have finance lease selected for US GAAP 2, I'm selecting the same amount. And let's take a screenshot of it. So that we can compare the figures later. And I'm submitting them. Over here, a draft will be created soon. And if you go to the lease component level, we can, the AG level, we can see the impairment loss and the remaining depreciable amount as depreciation life as 5, and the loss as 9,899, which is what we seen here, 10,899 minus the recoverable value. So we can then send to assessment. And again, the effective date, it's set by default, and I can submit them. Over here, a preliminary schedule will be created, and we can check to see the impairment loss if it is correct. And we can go to the schedule. All column schedule. The orange line depicts impairment event had taken place. And if you go to the right, you can see the impairment loss, 9,899. And if you go to the extreme right, you can see the NBV is the ending NBV is 800. And if you add the depreciation 200, we'll get the recoverable amount set, that is $1,000. And you can see the remaining, the asset has been depreciated for 5 periods. And at the end of the 5th period, we have the NPV set to 0. Now, if we are happy with the result, we can approve them. We can confirm the classification since it's already done in the original contract. And then we can complete the remeasurement and confirm. At this point, we merged the document and the impairment event would have been affected in the original contract. So if you take the schedule here, all column, you can see the impairment event in February. One thing to note is if the activation group is classified as ASC 842 operating, then we cannot do any additional event with financial impact. For example, remeasurement, indexation event, and casualties. We can do another impairment loss. So that's it for impairment loss. Now, IFRS 16 and GASB 87, we have an option to add impairment gain. We can reverse the impairment loss that is already recorded. So let's go to the context menu. And I want to have the impairment gain in March. So I have to make sure the postings are done until then. So view posting, and I'm posting for the month of February. Also for the US GAAP. And now I'm going to have another impairment event. Again, the impairment date, it is set to the next open period without posting. So 1st March 2022. And I'm selecting impairment gain. Here we have the book value, net book value, and total impairment loss that was added before. And gain amount, this field shows the difference between the cumulative impairment loss of the previous period and the non-recoverable impairment loss. So if you go to the contract, we have the impairment 9,899 and the non-recoverable impairment loss is 899.94. And that's what is shown over here. We can reduce it if we want, but for this purpose of the training, I am keeping it as 8,999. And I'm submitting that. And if I go to the terms and condition, we have another line saying impairment gain and the same amount, 8,999. I'm sending it to assessment. Again, the effective date is set by default and submit. Here we have a preliminary schedule. I can go to the schedule and I can take the all column schedule. The third or the second orange line, it depicts the impairment gain event that we just did. And if you go to the extreme right, we see the impairment post has impairment loss has been reversed. And the amount is 9,899 minus 899.94. And once you're happy with it, you can continue with the workflow, or if you're not, you can delete the draft from here. And now we also have the option to do an accelerated depreciation via impairment. So again, we have an active contract here with the with 12 months term, and I want to do the accelerated depreciation from March. I made sure my postings are done until February. And I can then go to the AG level, do an impairment, then select impairment loss, and I can select, I can say I need the depreciation, let's say we are depreciating the asset completely within the next 5 months. So I'm selecting 5 here. And I'm copying NBV beginning of the period to the recoverable amount, making the impairment loss as 0. So now when we go similar for the US GAAP and submit. Again, a draft will be created. And if we go to the terms and condition, terms and condition, we have an impairment loss with remaining depreciation life as 5, and the impairment loss is kept as 0. And once I send to assessment, submit, we can go to the schedule, all column schedule, and we can see there is no impairment loss here. And the asset has been depreciated for 5 periods, and on the end of the 5th period, the NBV is set to 0. Do you have any question?
So maybe just another note, as you can see, there's no orange line when you simply perform just the accelerated depreciation, because there is no loss that the system calculates for impairment. However, you can observe the effect of applying the accelerated depreciation. So we wanted to present you all the different type of events that you can do through impairments. And the first example that Pratibha presented, there was an impairment loss associated with the shortening of the useful life. But you can have situation where the asset continues to have the same useful life, but only apply an impairment loss. We do support situation where you can apply different amounts by standard. That's why you saw at the beginning you have different fields, so you can apply them differently. Yes, thank you. So you could have very easily have a different amount for US GAAP, and this is also because the rules for getting to the recoverable amount are somewhat different. And even in certain situations, if you want to exclude one of the standards, so for example, you want to apply the impairment loss only for IFRS, but for US GAAP, the basis for calculation doesn't trigger an impairment, then you can simply, as you saw in the latest example, set the impairment loss to 0, just to allow the system to calculate the impairment for only one standard. And we know that the impairment scenarios are complex. We wanted you to be aware of the different cases that and scenarios that you can apply. And if ever you have even more complex that we are thinking, that we are aware, reach out to us. We'll be happy to work with you for your case.
And on this note, in our next version, we have expanded the impairment function, and in 6x, we will be able to do a full impairment.
Yes.
And
So, exactly. Thank you so much, Pratibha. So we are further innovating and expanding the impairment function to offer you even more case scenarios.
And now let's move on to reports. So reports show information for contracts which users have access based on their assigned authorization profile. So for example, if you don't have access to certain contract or company, you cannot get the reports for those specific contract or company. All the details in the reports are taken from all column schedule. And in order to access our report, we go to the main menu, and we have two sections, compliance report and additional report. First, we are going to start with compliance report, specifically disclosure report. So let's select that. And we have 9 different types of disclosure report. And these reports are going to display the necessary information required to prepare the disclosures for your financial statement. So before we go into the details of the report, we are going to go over different filters that we see here on this page, and we will see how to interact with this user interface. And for disclosure report, we have 6 mandatory filters. First one is reports. For today, we will be looking at the asset roll forward report. So let's select that. Yeah. And the next mandatory filter is the FY variant. So the option here depends upon your configuration, what kind of variants you have set up. In our internal build, we have just one, which is calendar. And then the next mandatory filter is currency. So this is to pick the currency in which you want the report to be generated throughout. And throughout the report, we are going to refer to this as a target currency. So it is important to note that you have to pick a common currency. So if you see here, we don't have any common currency. It is because of the filter that I've selected. I have selected system as all, business unit as all, company as all. So if I have every filter set as all, then I don't have a common currency. So let's say I select a system. Let's say I'm selecting disconnected. And now when I see, I have a common currency, US dollar. And if I select a company here, D111, now we have access to the group currency, that is USD, and our company currency, which is Canadian dollar. And now if I add, for example, US D222, I have only the group currency. So we can select only that. So let's say I'm selecting USD here. And now the next mandatory filter is our accounting standard. So depending on your configuration, you'll have a list of accounting standards that you support. So we have IFRS 16, ASC 842, 840, and IS 17. I'm selecting IFRS 16. Now, the last mandatory filters are about the dates. So disclosure reports are limited to 12 period range. It doesn't need to be 12 calendar periods. So for example, if I select 2022 April, and the year end, we have an option to select 2022 and 2023. And if I select 2023, I have an option until 28 Feb. We can't go past that. So we are confined to this 12 period, 12 months. The remaining filters are optional and they can be used to generate a more targeted report based on your structure and your configured detail. So what we suggest is we really start from the top of the hierarchy and continue narrowing down the selection. So we start with the system and then the company code, cost center, for example, cost center, etc. So once you determine the filter that suits you, you can save the filter and use the filter from here. Now let's move on to the actual report. I have already pre-generated a report for us to use. And I'm selecting that. I have the asset roll forward report. So it presents a yearly summary of the right of use asset and the remaining and for the remaining lease term. So like we have in all disclosure report, we have the filter and a summary table in the target currency by asset class. So this report is going to show you one line item per period that a contract is active during the dates that we selected. Plus, we also have a summary line in order to perform the roll forward. So we have a summary line, for example, for this contract. This is the summary line. And we have another 4 line for the per period it was active. And let's see, we have all the other details of the contract ID, the contract name, the company code, profit center, all those details. And if you go to the stream right, we have the opening book value, new ROU asset, and all these details. So we can either see the opening balance, or if the contract starts this year, then we can see it in ROU, new ROU asset. And if you're having a addition or if you're having a disposal, all these will be shown in this one. And we have the closing book value. We have the accumulated depreciation expenses and the closing net book value. We have all these details in our target currency that we selected, that is USD. So if we take this particular contract in the system, here, you can see we have a base rent of $2,000 from January 2023 to December 2023. And we have a casualty here in 30th April 2023. So here we can see there is a disposal of 23,742. So if you go to the all column schedule, we can see the addition 23,742. This was the addition. And we can see the accumulated depreciation per period. And we can also see the dispersal. And similarly, we have this contract. If you go to the schedule, all column, we can see all the details. We have since our report is from 2023, we have an opening balance. Opening balance of the GBV and the depreciation expenses and the closing detail, net book value. Do you have any question?
No, we wanted to present you an overview of the asset report. I'm sorry, I'm cut off somebody. Was there a question?
No, Catalina, no,
No.
hands raised so far.
No worries. We wanted to start this series where we're going to continue to present you different different reports that we have available and what is the logic behind those reports and materials that we will have associated with the office hours that you can find on our portal. You will have more details about this and about reports in general, and the walkthrough that Prativa gave you about the filters. We really thought it's a good time to start introducing you to each of the reports that we have available, and to start the discussion on that. So with that in mind, if you have other specific question, and we have improved, and we have come a long way with the reports. We have enhanced the details that we have in there. The type of columns, the referentials, IDs, the information that is in there. And for the asset roll forward, if you remember, during our latest session, we presented the latest enhancement that we had on the asset roll forward. So we are keeping our reports up to date, and based on your feedback, we continue to improve them and to make them as useful as you need them to be. So with that in mind, this is why we started this type of series in our office hours. So if we don't have any other questions or comments, we'll be giving you a few minutes back. We are at the end of our session, so I will stop the recording, and I hope to see you all next time. Thank you so much, Prativa, for presenting this section, and hopefully they will be interesting enough for people to come back for more reports starting next time. Thank you so much, everybody. Wishing you a good day. See you next time.
Thank you.
Thank you.